and I'm going to tell you that same story, just add my little spin to it. So here we go, story time. Hey guys, welcome back to my channel. Thanks so much for tuning in. And so today I was going to talk about the tools that I used to research what stocks to buy, but I decided not to talk about that today because there's something more important that we need to talk about. But if you go in this description below, you're going to see the links to those tools that I use, so you guys can go check them out and see how they can help you, and I'll add some little notes on what they do. But today, as you see in the title, we're going to talk about what is a stock and why do stock prices change on a day-to-day basis, on a second-to-second basis. So pretty much what a stock is a stock is a contract or an agreement that you own a certain percentage of a company. Now, why would you want to own a certain percentage of a company? Because of the probability that that value of that company is going to grow. Now, if the value of the company grows, then your equity in the company, the money that you invest in the company, is also going to grow. So that's how you increase your wealth. That's how you get the money that you decide you can do whatever you decide to do with it. Anyways, now how does the value of this company grow? What makes the value of a company grow? Now, there's this story that someone told me a while ago, and it really cemented the concept of the value of a company growing. And I'm going to tell you that same story, just add my little spin to it. So here we go, story time. Now, there's this little girl called Gloria. Gloria is a 9-year-old girl who just got her first allowance from her parents. Her parents gave her $25. I think that's lots to give to a 9-year-old. I don't know. But Gloria decides she wants to flip this money and she wants to create a business with it. What business does she want to make? She decides to go with a lemonade company, Gloria's Lemonade Business. So Gloria goes on the internet and researches what she needs to make this company work. And she sees that she needs a jar, a couple of jars, she needs cups, she needs the stand, she needs the banner that says Gloria's Lemonade Stand, and she researches the price and she sees she needs about $100. Now, Gloria only has $25, so how is she gonna get the rest of the money that she needs to make this company? She goes to meet her mom, and her mom says, all right, I'll give you another $25, but it's gonna be my $25, and you're gonna give me a cert. I'm gonna be part of the owners of the company if I give you this money. The mom is like, cool. She goes to meet her dad, and her dad says the same thing. Cool. And then she's like, who's gonna give me the rest of the money? And she comes to meet me because she knows I invest in businesses. And she's like, hey, Delapo, can you give me $25 and you're gonna own a quarter of my company too? I'm like, sure. You're a smart girl. 9-year-olds are smart. I'm sure you can make this business work. So now she has $100 to create her company, and she goes out, buys all the stuff she needs, and she sets up the business. And it's day one, and she's ready to go. Before she starts selling anything, a businessman comes over and says, hey man, I want to buy this company from you. Hey Gloria, I want to buy this company from you. And how much does it make sense for that businessman to spend on this business? It makes sense that he spends $100 because everything she bought is $100. So if he buys that business at that time, it's just the assets that it's worth. It's pretty much not worth anything yet. Gloria declines and says, hey, I'm gonna run my business. I don't want to sell. Cool. Businessman walks away. Gloria starts to sell stuff. She's doing great. She's making a lot of profits, and she decides to reinvest this profit in her business. And a week later, she creates a second Gloria's Lemonade Stand on the next street. So now there's 2 lemonade stands with Gloria's name on it. Businessman comes by again and says, hey, I want to buy your business. How much does it make sense to sell the business? Maybe $200, right? Because Gloria's company is doing double what it was in the start. Maybe $200, no one's sure. Businessman offers to buy for $200. Gloria says, no, I'm not gonna sell. She keeps expanding. Now she has 10 stores, right? She keeps reinvesting her profits. Now she has 10 stores all over the city. Businessman comes back and says, hey, I think your business is now worth $1,000. At that point, I hear what the businessman thinks the company is worth. So I have a quarter in that company, a quarter of the company, and I think my $25 is now worth $250. And I go meet my friend Mike because I actually need some money right now because I want to start my YouTube channel. So I go meet Mike and say, hey Mike, I have I own a quarter of a company that's worth $1,000. Do you want to buy that quarter from me? And you give me $25, I give you that equity in the company. And Mike is like, sure. So I sell him my quarter of the company, and Mike gives me $250, which is the worth of that quarter of the company. And I walk away and go buy a camera. Mike is now a part owner of this company. Cool. But Gloria, back with the businessman negotiating, and says, no, I'm not gonna sell. I'm gonna keep my equity in the company. I'm gonna keep my company and not sell it. This man goes away. Gloria keeps doing great things. A couple weeks later, Gloria has expanded throughout the country. Gloria now has 100 stores all over the United States. All right. And the businessman comes back and says, hey, very persistent businessman, by the way. He comes back and says, hey, I want to buy your business again. I think your business is now worth $10,000, which is amazing. So the equity that I sold to Mike for $250 is now worth what? A quarter of $10,000. Sold it for $250, now it's worth $2,500. So just because Gloria's done great things with her company, that share that Mike bought from me has grown from $250 to $2,500. And that's the way the value of a stock grows. When a company is growing, the stock also grows with it. Now, the way Gloria decided to sell 4 shares of a company at $25 each, she could have chosen to sell 40 shares of a company for $2.50 each, which will still give her the total of $100, but there'll be more people that are investing in her company, but they've invested a smaller amount of money. And that's the same concept that a lot of larger companies use, and that makes them have different stock prices even though they have similar value. Take, for example, Apple. Apple's stock price is around 300. It's a little bit less after the coronavirus thing, but Apple's stock is about $300, but Apple's value is about $1 trillion. Likewise, Amazon stocks are $2,400, but Amazon's value is about $1 trillion as well. Now, how do they have such different stock prices but have the same value? Apple, with its $300 stock price, has about 4.4 billion stocks in circulation. And if you multiply that 4.4 billion by the $300 stock price, that gives you about $1.3 trillion, which is around the value of Apple. And Amazon stock price is $2,400. If you multiply that by 500 million, which is the number of stocks they have in circulation, that gives you about $1 trillion each. So they both have the same value, but have different stock prices because they have different number of people invested in that company. And same concept for ExxonMobil and Netflix. ExxonMobil stocks are about $42 and Netflix stocks are about $420, but they both have the same value in the company. It's just that ExxonMobil has more people that own the stocks. ExxonMobil has more stocks in circulation, and Netflix has less stocks in circulation, but they have the same value as a company. So how can you determine how much a company is actually worth in real life? There's no set way, but if you talk to a finance major, they're gonna tell you things like there's historical valuation method, there's discounted cash flow method, and these are methods that they use to estimate how much a company is worth. But that's pretty much all this is, an estimate, because nobody knows for sure how much any of these companies are worth. You can only estimate. And in the stock market, that's what people are doing as well. They're estimating that this company should be worth about this much, this company should be worth about this much. And what goes on in the stock market is people are bidding electronically. So there's thousands of people online at every point saying, I want to buy it at this price. And then someone also has to agree that this happens at this price. Now, these aren't things that you have to worry about. It's all done electronically, but it's pretty much people estimating that this company is worth this much. And that price changes every second, every hour, every minute, every day. So based on that price that people are estimating, that's the price that you see every day when you go to your stock app, the price you see when you go to Robinhood, the price you see when you go to E-Trade, or whatever app that you decide to use. So that is what a stock is, and that is how the price of a stock changes every day. So that's all I have for you guys. Thanks so much for watching. If you like the content, make sure you like and subscribe and tell your friends about it. But until next time, peace.